that you may be holding might not be safe given the latest SEC actions. In today's video, I'm going to go through the tokens that you have to be very wary of, and then I'm also going to explain why that is paving the way for a new narrative of tokens that are SEC resistant or safe from sanctions, which could be outperformers during this period. In today's show, we're also going to go through some of the stuff that happened with the FOMC yesterday, because we obviously had a big FOMC Fed meeting and how that actually affected the market. Of course, that did result in a market correction, and things are looking really shaky right now. So we're going to go through the markets, look at the charts, and assess where we currently sit, and of course discuss what altcoins aren't looking safe in the eyes of the SEC, and then which altcoins are looking safe, and by nature of that, could be outperformers over, let's say, the next few months, whilst a lot of these court proceedings play out. And that could also take years, because we know how slow the courts are to actually rule on this stuff. The XRP case is an example of that. So the first thing I want to do is go through exactly what happened with the FOMC, because that was obviously one of the major dates of the week. We had the CPI data coming in at 4%. It was slightly below expectations, but the Fed came out and said that they are expecting to hike rates an additional 2 times this year. So they actually did pause the Fed funds rate. However, they are expecting 2 more rate hikes this year. So after a 2-day meeting, they decided to leave rates unchanged. But the surprising aspect of the decision came with the dot plot. If you watch my yesterday's show, I said the fact that they were going to pause is basically baked in. It's the dot plot we have to pay attention to, in which individual members of the FOMC indicate their expectations for rates further out. The dots moved decidedly upward, pushing the median expectation to a funds rate to 5.6% by the end of 2023. So this hiking cycle is not over. This is not a full-blown pivot by any stretch of the imagination. It is simply a pause, which I assume is a strategy for them to assess where they are currently at and assess how the economy responds over the next couple of months. So here is a summary of the Fed decision for those who missed it. The Fed left the rates unchanged. There was a unanimous decision for the rate action. The holding rate steady to assess policy impact. Strong support for more rate hikes this year. As I said, they alluded to an additional 2 hikes throughout the remainder of 2023. The Fed sees inflation at 2.5% by the end of 2024. That is slightly higher than the original target of 2%. And then for the first time in 15 months, the Fed did not actually raise rates. So it was a historic day. The fact that the Fed paused, I think just the market was already expecting that. What it didn't like was the updated dot plot, which was slightly more aggressive. Now, it's kind of an interesting environment at the moment because crypto is actually underperforming significantly the NASDAQ and the stock market, which, it typically tends to follow. It's not a good sign that we've had the NASDAQ over the last few weeks absolutely pumping up 16.5%, largely driven by a few tech outperformers in the AI sector. But then you have Bitcoin significantly lagging during that period, actually down 16%. So there's over a 32% discrepancy right now between Bitcoin and the stock market. It just makes me feel like maybe there is something going on in the market, whether that might be, a forced seller, a fund capitulating, or maybe there's some sort of, DOJ criminal action that has the whales kind of scared. There's something going on in the background, in my opinion, besides from, the caveat that the NASDAQ has been carried by a few tech outperformers, and also Bitcoin aggressively led during the banking collapse. So it's natural for some sort of recalibration of the beta between the stock market and Bitcoin. But it just still feels like there's something going on. And I think the SEC news has impacted the market. What we typically see with market dumps is when market participants choose to go risk off, they will sell altcoins and some of your riskier coins first. So the section of coins that I'm going to talk about today that got sold off most aggressively were the SEC coins, because they are obviously the coins with the most dubious backing at the moment, considering there are likely going to be legal proceedings involving these coins, and there are headwinds in terms of, whether these coins can be listed on certain exchanges and actually traded in the US. So those were sold off first. Then what was sold off second was your, major caps. And a lot of those major caps were just sold off under the, purview of people de-risking. That's typically what happens. We see altcoins being sold off. And then your third category is the coins that don't respond initially. If the market keeps declining, then they tend to respond. And I'm talking here about like your Bitcoin and Ethereum. Typically they are actually lag alts. So when you see big market collapses, if they are to sustain, you'll see, your smaller alts, your risky alts, your large cap alts, and then Bitcoin and ETH go last. So the Bitcoin breakdown is only starting to happen now, and the altcoin drop was actually foreshadowing the Bitcoin and Ethereum drop. So that just alludes to the fact there's something going on in the market right now, whether that's the SEC dynamic or whether there is more news that will probably come out after the fact. Investors are generally choosing to go risk off. And there is, as Benjamin Cowan alludes to here, a slight summer lull happening with Bitcoin tucking in below its 2 moving average bands on your weekly time frame as well. Obviously, a close below this level is not what you want to see if you are a Bitcoin bull. Just a little bit of TA before we get into the crux of the show, which is obviously the altcoins that are safe. And some of the altcoins that are looking shaky. I just want to kind of go back to this head and shoulders pattern that we were talking about on the show, like, a few weeks ago now. This actually played out. You had your head and shoulders, you had a fake out, an underside retest of the horizontal at the 27.8 level, a rejection, and basically it went straight down in line exactly with my chart, basically. So this played out pretty much to a T. Your target on the head and shoulders is 23.8. I mean, nothing to suggest that this won't play out, just given the fact that market structure has pretty much obeyed that trend. The other chart I want to go back to is the trusty chart I've been showing on the show for the last, few months now, since the beginning of April. And this is basically, your diagonal regressive trend. This is essentially still in a downtrend. So you have your highs. I've talked about this pattern many times. With your lower highs coming in and then also your lower lows coming in, this pattern has remained the same. We actually made a new lower low today. And look, if you've been shorting this, you would have made a fortune. Okay, yes, there's been fake outs, but nothing too crazy as long as you're not using insane leverage. There's been opportunities to short 1, 2, 3, 4 times even yesterday, if you've just been following this trend. So for everyone that has been watching my show, hopefully you have made a killing off some of the alt shorts. I've done okay off it. But I just wanted to kind of mention this trend is still intact, and until we kind of start breaking this trend and then look to reclaim, most importantly, the 26.5 level, we are still in a downtrend. And you always have to respect the trend in crypto. If you're trying to fight the trend, it's like trying to swim against the current. So in terms of trading, it's hard to pick off longs here. It's mostly just catching a falling knife. I think for by and large over the last couple of months, when you see lower highs and lower lows, you're better off actually shorting more than you are longing when it comes to trade setups. And then obviously shorting the weaker coins. So right now, you obviously wouldn't short Bitcoin or ETH. If you were going to open a short, if a setup presented itself, you'd look for weakness across altcoins. And some of the altcoins that have been showing the most weakness are, of course, your Solanas, your Matic, even your Optimisms. These kind of coins with either SEC scrutiny, or 2 a high amount of supply. So crazy token unlocks in the case of Optimism results in more aggressive sell-offs. So those tokens have done worse, and subsequently they have been the best shorts. That is only really relevant though for traders, active traders that I don't know how many of you guys are actively trading every day, but for active guys, those shorts are good to pick off. If you are a more long-term investor, well, I have a plan for that I'm going to discuss later, which obviously is more skewed towards the 3 to 4 year time horizon, with obviously a long bias, because I still have conviction in this market over the next 3 to 4 years. Although we're in a bumpy situation right now, there is light at the end of the tunnel, and for that reason, I still want to remain net long over a period of time. Shorting is more just a vehicle if you do choose that in your trading strategy to make a bit of short-term capital, really, so you can accumulate more Bitcoin and ETH at lower prices. So it's actually good news a lot of the time when you do get big market dumps, because that spells another opportunity to accumulate. But there are some tokens, which we'll talk about today, that might actually be safer to accumulate and could respond quicker than some of the other tokens, which are actually showing weakness. And even if we do get a rebound, could perform weaker. So we are going to discuss that. Before we get into that, just quickly, I want to touch on Ethereum. Did break below range highs at 1786. We are now breaking below the 1650 level. This is actually a pretty key level ETH needed to hold. So the fact we broke below, obviously we had the first break of the diagonal in the red zone, needed to hold the horizontal structure, which was range highs, which formed since June 2022. This is actually a pretty big support level for ETH that held strong all of April, May, and the beginning of June, and has now broken. So this is obviously not a good sign for Ethereum. another floodgates are open to 1423 target. So obviously, we can reclaim. This is on the daily chart. There's no daily close below this level. We can, come back in. That could be a fake out, and then we could reclaim range highs. That's something that often happens with Ethereum. You do get these fake outs just in general when it comes to crypto. But if you start seeing a daily close below this level, an underside, bearish retest at 1670, that could be your kind of signal to flip short and then target the 1440 zone, because we know how. I don't know if you guys can remember back in January, but the 1680 level was so key. Like, I remember on the shows talking about 1680, 1680, 1680. Like, at the time, you guys will remember, like, look at this. Like, it was a huge level of resistance, and then it acted as a massive level of support for the next run up to, range highs and above. This was your, clear level that ETH needed to break. That level is actually breaking to the downside now. So it could be an SR flip, so a support resistance flip. If this flips back into resistance, obviously that's not a good thing. Let's just see what happens though with ETH. At the end of the show, we're going to talk, a little bit more about my trading plans, because I want to get into the thumbnail and the title of this video, of course. But yeah, just wanted to comment on that for a second. Before we get into things, if you do want to trade and you are in the US, there is a pretty good exchange, Prime XBT, which you can trade on and claim a 20% deposit bonus. So I don't know if you are trading, if you are taking some of those setups like that I've been showing on the show for the last few months. Prime XBT has your back. It's got commodities, crypto, some altcoins as well, of course, and also Forex pairs as well. So if you want to trade, there is a 20% deposit bonus, which is massive. So let's say, just to put it into context for you, if you deposit $1,000, you get a $200 bonus. 10,000, you'll get a $2,000 bonus, and so on and so forth, up to a max reward of $7,000. So theoretically, you could deposit $30,000 and get a max bonus. So use the code Miles20. There is a link in the description if you want to trade. I know Bybit has been implementing KYC for Americans. So for the guys that don't maybe have a place to trade anymore, I know it's a difficult landscape. This is a good option for now, and you also get a huge bonus in the meantime. It is only limited to the first amount of select users. So I think that promo will probably be ending this week. We did do a slight extension while I was away, but I think, we'll be closing that deposit bonus off soon. So if you want that, you got to claim it soon. I'll look at a couple of questions, and then I'm going to get into things. Shill your own bags. Absolutely not. Today, we're going to talk about how my bags are actually looking. But spoiler, I've actually condensed things. I think in the bear market, it's so important to run with a smaller portfolio weighting. And what I mean by that is, instead of holding 20, 30, 40 tokens, and not being able to keep up with all the news, not being able to research them all, not being able to stay up to date with the trends, it's, in my opinion, it's actually been better for me in this market to focus on a select 10 to 15 maximum altcoins, but ideally less, that I have like a lot of conviction in. Because here's the problem. If you hold altcoins that you don't have conviction in during the bear market, it's going to be extremely difficult for you to continue to average into them if A, you don't actually have belief in the project, and B, you don't really understand the project. So it's only going to be possible for you to take advantage of lower prices if you actually believe in something. Because if you're holding something you kind of half believe in or don't really believe in, prices drop, you're going to panic. And there's something called time-based capitulation in the market. It's where, it's not the price drops that actually sting you. It's the time that stings you, because people just aren't able to, maintain the stamina to survive in the market for, a year, 2 years of bear market. It gets tired and time-based capitulation kicks in. The only way to avoid price or time-based capitulation is to actually genuinely have a strong thesis behind what tokens you hold. And for me, the best way to do that is to condense things down during the bear market, really believe in what you hold, have strong conviction to average into what you hold, and also be a bit more selective with what narratives you hold. So instead of holding 20, 30, 40 tokens that cover L1s, L2s, gaming, bull market portfolios, which are much bigger, that cover everything because everything pumps, I've preferred to actually condense it down and focus on a few sectors, two of which we're going to discuss today. But sectors that I think can outperform on a relative basis compared to the rest of the market. Because otherwise, if you're too diversified, you're selling yourself short on your winners, because you might pick a DEX narrative that runs super hot, but since you're holding every other token in the market that's still performing shit, your actual absolute performance on your portfolio won't be great. So for me, I'm condensing things. I'm focusing on strength. I've really tried to hammer this point home this year that, strength wins, especially in this market. And next bull run might look very different from the last bull run. The narratives that are really relevant to that cycle specifically, and solve the problems of that cycle specifically versus the old cycle are going to run much harder. So I just kind of wanted to touch on that for a second before we get into the rest of the video. I'm really condensing things at the moment. Obviously, still DCAing to Bitcoin, still DCAing to ETH, but trying not to hold 50, 60 tokens. Like I see some people with 30, 40 token portfolios. It's hard in a bear market. I mean, unless if you genuinely have conviction in 30 tokens and you understand them and you're tracking them all and you're fully aware of what they do and everything, sure, go ahead, do it. But I know for most people with limited time, it's not possible to keep on track of 30 narratives. And it's much better just to be like a little bit less diversified. In the bull market, I open up. Like in the bull market, happy to hold 40 tokens because, I mean, most things just kind of get lifted. Like, the rising tide lifts all ships, right? In a bull market, but especially in the bear market, in the early stages of the bull market, there is going to be extreme sector outperformance. And there's also going to be laggards, extreme laggards that will carry on into the bull market before they're padded by, an injection of liquidity. All right, let's talk about the title of this video, the thumbnail. Some people are saying clickbait. I don't really think it's clickbait because if you're holding some of these tokens, you could be fucked at some point. And we've already seen a lot of them perform really badly off the back of delisting. So I do want to discuss what the SEC tokens are, what it actually means if a token's being called a security, and then on the flip side, what tokens aren't being called securities, and could this be paving the way for a new narrative, which is potentially going to be an outperformer in the context of what we are seeing at the moment in terms of regulatory action. So I have talked about this from previous shows. Is Binance and Coinbase filings were lodged by the SEC against Binance and Coinbase. In these lawsuits, the following tokens were named. All the tokens on your screen were specifically pointed out to be in either or both of the lawsuits as securities. Now, essentially, here's the full list of tokens if you want to screenshot this video, but it's Atom BNB, BUSD, 𝗏𝗃, Chile's Nearflow, ICP, so on and so forth. Both of the cases named Sol, 𝗏𝗏𝗃, Sand, Mana, 𝗙𝗏𝗃 Infinity as securities in the eyes of the SEC. So what do these tokens have in common? Why were they named securities? Well, one, basically all of these tokens had an initial sale / fundraising event. So it's important to actually establish why a token is a security because that will give us an indication as to what other tokens in the future the SEC could try and deem as a security. 2, each project pledged to improve the protocol via ongoing development. So this could be biz dev cost, marketing expenses, etc. 3, social media was utilized to express the protocol's features / advantages. So there was advertising, oftentimes using comparisons, feature boosting on the social medias of those accounts, and also outsourcing to other accounts and media outlets to post about those projects. Now, this is where the Howey test comes into play because obviously the SEC can say anything is a security that it wants, but until like the courts verify that it is a security, it's basically meaningless, right? Now, the SEC can cause a lot of pain in the short term because they can force basically exchanges into delisting tokens, but at the end of the day, there does need to be a test which is satisfied, aka the Howey test, that determines whether a token is a security or not. There's 4 criteria here. It needs to be an investment of money in a common enterprise with the expectation of profit and to be derived from the efforts of others. The big debate in crypto right now, though, is why is the Howey test, a test made around World War II, relevant in 2023 in a new booming innovative digital asset class? That's the major question mark a lot of people have. Now, of course, the SEC is arguing that the 19 aforementioned tokens do satisfy the requirements of the Howey test due to the common factors I mentioned before. However, there's a big battle at the moment, and the XRP case is an example of this as to how relevant in 2023 the Howey test actually is. That's why other countries have been developing frameworks like the European MICA framework. UK is working on a framework. Australia has token mapping. Hong Kong and Abu Dhabi obviously being fairly open with things as well. That's why other countries have started to implement custom digital assets regimes. The SEC has been against doing this, much to the dissatisfaction of us and the industry because, it's extremely detrimental not to have regulatory clarity. At the end of the day, if you watch yesterday's show, which I highly recommend watching, by the way, because I think it's quite important, which summarized the current landscape of crypto in the US versus crypto abroad. Basically, what it's doing is it's just shifting innovation offshore. Now, I would love the US to be on board with crypto. Of course, we really, really want the US. because they are the biggest retail component and the biggest financial backers of tech. But at the end of the day, crypto was built for this. It's decentralized. It's immutable. The reason crypto exists is to be censorship resistant. And for that reason, you can make the argument, now maybe not for all altcoins, but at least for Bitcoin and Ethereum, that a country trying to stop it only gives it more power long-term as a form of hard money. So that's an interesting argument as well. But I digress, whilst we discuss the altcoin situation. So 19 altcoins were named as securities by the SEC. Of course, this needs to go to court. Binance, Coinbase are going to go to the courts and fight over this, and we will get answers, but those answers will take some time. And in the meantime, exchanges are being put under pressure. Because think about it from an exchange perspective, right? If you're Robinhood, if you're Kraken, if you're Binance, if you're Coinbase, and you're holding tokens that the SEC is saying is a security, you're running now the additional risk of pissing them off and maybe potentially getting further actions put against you just by listing and offering these tokens. Now, Coinbase is willing to die on the hill here. Brian Armstrong said they're not delisting, that they're going to keep their staking service. But there are a lot of other exchanges like Robinhood and Kraken that haven't had crazy court actions against them, that just don't want to be tied up in this mess. And they view the easiest thing to do is just to delist these tokens. So we're seeing liquidity on a lot of these tokens really dropping in the face of what's been mass delistings. Robinhood obviously put pressure on ADA, Polygon, and Solana. Those three tokens were three of the worst performers. In fact, if we just go into CoinGecko and sort by 7-day, we can see some of the worst performers were Solana. Where's 𝗏𝗏𝗃 here as well? 𝗏𝗏𝗃 minus 19.2%, and ADA as well, which is next to it, minus 18.5%. So some of the worst performers. Now, there were worse performers like Ape, which had an unlock, 𝗖𝗄𝗄𝗃𝗃, 𝗏𝗏𝗃𝗃. But what do all of these have in common? Well, most of these were named in this document. So if we go and we look at the tokens that were listed by the SEC as securities, many of these tokens, SAND, 𝗕𝗍𝗄𝗃, 𝗓𝗏𝗃, these are some of the worst performers. You've got SAND, 𝗕𝗍𝗄𝗃, 𝗓𝗏𝗃, was 𝗨𝗏 here as well, potentially. Actually, I don't think so, but 𝗨𝗏 dropped for different reasons. But basically, every coin that was mentioned as a security is some of the worst performers. So it goes back to what I said at the beginning of the show, that typically when markets go risk off, it starts with the weakest coins first. And right now, basically unequivocally, the weakest coins in the market are the coins under the SEC's purview. And then you've got your other alts, and then Bitcoin and ETH go last. But that is the basically the order of the sell-off at the moment. So when Robinhood announced that they would be delisting these three tokens, they had a massive dump. But Robinhood was just the first of many. eToro also announced that they won't be able to offer Algorand, Decentraland, Dash, Polygon. They're starting to delist as well. Could that mean that more tokens are starting to be delisted off some of these exchanges? For example, in the SEC versus Binance case, we see in section 352, they said this includes but not limited to, when they mentioned the altcoins that were considered to be securities, which means, look, not limited to implies that there could be more. And if you set a precedent for Atom or SAND being a security, then you could set a precedent for most of the crypto market being, or at least most of the altcoin market, apart from the few coins I'm going to talk about in a minute, for being securities as well. Now, Kraken, they're operating in the US as one of the biggest US exchanges. They've faced scrutiny in the past. Are they going to follow and delist some tokens? Maybe. So now we have to look at, what's next. What other exchanges are going to delist? So that's the first thing that happens when a token's called a security. You get the exchanges panicking. But what if the courts actually rule a crypto as a security? What does that actually mean for crypto? Well, I'm going to do a full video on this because it's actually a really interesting discussion. But just to summarize, firstly, it limits where crypto can be traded. So crypto can't be traded on these unlicensed exchanges anymore. So if a token is like 100% named a security, it couldn't be traded on Coinbase, Binance US, Kraken, Robinhood, unless the appropriate licensing was in place. That licensing is only in place if the SEC approves it. To this date, they haven't been willing to approve or, officially clarify what is or isn't a security yet. Is this because they're paving the way for some of their TradFi players to enter the crypto market? Do we see a licensed JP Morgan exchange, like, the NASDAQ of crypto? I don't know. There could be a hidden agenda here, but all we know is that there isn't the sufficient clarity to give the correct licensing at the current time for exchanges to actually be able to trade securities. So that is a problem But obviously the only way we're going to get a resolution there is by going to the courts. In the interim, it does put pressure on some of these tokens, as you know, there is a bit of panic in the meantime. Now, it doesn't mean these tokens will be weak performance forever. Like, obviously, the market is going to kind of eventually get sick of this narrative, and it's probably going to blow over. But at least in the short term, it's relevant because these are the tokens that are objectively performing the weakest. And because of that, you can look at the opposite side of things, which is the tokens that aren't in this category. They could objectively perform the best, and they are. And I want to talk about them now. So those are the tokens that are named securities. Here's the dashboard. There is now a discussion around tokens that aren't being called securities. So let's have a look at some of them. So basically, the first one is Bitcoin. Obviously, Bitcoin is definitely not a security. Even 𝗫𝗏𝗧 admitted everything other than Bitcoin is a security. Now, 𝗫𝗏𝗧 has changed his tune. A few years ago in 2018, he said Bitcoin, Ether, Litecoin, and Bitcoin Cash are not securities. I don't think Ethereum is a security. I know the CFTC said it was a commodity. SEC is claiming it's a security. Look, there's arguments, for and against. When Ethereum was proof of work, it was basically 100% not a security. Proof of stake has now implemented the expectation to derive profit factor through the staking mechanism and the deflationary aspect. Could that create the expectation to make a profit? Well, that is an argument that the SEC may use if ETH goes to court. But the interesting thing is that in the Binance and the Coinbase lawsuits, they did not explicitly name Ethereum. Maybe it's because the SEC doesn't think it's an easy argument to win. And I don't think it's going to be an easy argument to win either. And I'm pretty confident in Ethereum in the context of the current regulatory climate. So for that reason, you can almost separate Bitcoin and Ethereum from the rest of a lot of the altcoins that are being called securities. And if you actually track them on the charts, you'll see here the orange line is the commodities index, the purple line is the crypto securities index, and you can see that the performance of Bitcoin and ETH versus the rest of the market has been extremely strong over the last few weeks. And although Bitcoin and ETH are now starting to drop slightly, still on a relative basis, they've held up remarkably well. Now, why is this? 𝗕𝗏𝗏𝗏, an analyst, which is not his real name, but that's his name on Twitter, but he is a great analyst, said that the market is beginning to realize how little the SEC news matters for Bitcoin and ETH and how much it actually matters for token projects that rely on American funding and American retail. So I think this is the reality setting into the market, and that's one of the reasons why the market has kind of separated in terms of performance here. As you can see, this divergence between what are commodities and what are securities. So that just adds to the conviction that I have in the Bitcoin and ETH trade. Now, this is just the way I do it. Obviously, nothing in this video is financial advice. You have to make your own investment decisions. I'm just going to explain what I personally do with Bitcoin and Ethereum. Every single month, I set aside a percentage of my income. So, let's say that's 10% of my post-tax income that goes into Bitcoin and ETH. So every single month I buy Bitcoin and ETH. Uptrend, downtrend, thick, thin, I'm buying. But the variables change. So I'm not a blind DCAer. There's a valid strategy that you can implement if you're really not paying attention to the crypto market. And that's basically just like having an auto DCA just every month. That's going to generally average you into Bitcoin and ETH over time. That's going to generally give you a decent cost basis. But I prefer a strategy called adaptive or progressive DCAing. And that is a strategy where, one, you change the percentage split between the two assets you're trying to DCA into. So if Bitcoin is overperforming versus ETH in a given month, I might skew the percentages more towards ETH for my DCAs that month. If ETH is outperforming Bitcoin, I might skew my investments towards Bitcoin. So I'm trying to get like the best buy at any given time versus Bitcoin and ETH. This will probably, go to the extent of 70-30 or 30-70. Anything more than 80-20, I think, is a bit much. And most months are 50-50, but the split does change between the two. So, a couple months ago, during the whole, banking collapse, I was skewing more towards Bitcoin in the beginning as it started to show relative strength. But as it started to show signs of topping out and overperformance versus ETH, so an overbought position versus ETH, I started to skew my DCAs back towards Ethereum. And now Ethereum has started to overperform. So basically that's what I'll do. I'll just split, change the percentage split between the two. The second thing I do is I change how aggressively I buy Bitcoin and ETH. So in an extreme month of capitulation, I will increase the percentage of my income that I put in. So if the market's in an uptrend, and I don't think it's like the best. Like let's just say we've pumped, and I like last month, for example, and I didn't really want to DCA into Bitcoin around $30,000. I decreased the amount of my income that I put into. I'm just guessing here, but around the 5% mark post-tax, which is quite small. But then if the market's dumping, so let's say we dumped to 22K now, I might put 20% of my monthly income into Bitcoin and ETH. So I'm still averaging in every month, but the months that things are looking shit, I will ramp up, and I will keep cash on the side to ramp up if I have to. Keeping it a percentage of your income, though, gives you a sustainable basis over time to DCA in. That's why I always think of it in terms of income terms. Obviously, I have savings, but money that's coming in, and that could be earnings from your business, your salary, your dividends, your yield of stocks. All of that counts as income. I prefer to do it based on a percentage of that, because then I can kind of, I know how much budget I have to live my life, basically, and I'm not dipping into stablecoin reserves every time I want to DCA in. Obviously, there are times where I will dip into my stablecoin reserves if I see a huge opportunity or there's a massive dump. I will size up using stablecoins. But basically, Bitcoin and ETH, I have strong conviction in long term. You guys have probably heard my thesis a million times on both, but basically, Bitcoin as digital gold, money printing is not going away. It is basically the modus operandus of the US and every country. That is what fiat currency exists for. Censorship resistant. I think in times like this, it's so important. Ethereum has very strong monetary policies, in my opinion. So the deflationary aspect in a bull run could be absolutely huge for Ethereum. But the other factor I think is really huge is the fact that yield. Okay, so let's say when interest rates start dropping, yield is going to dry up in a lot of the TradFi market. And basically, if you guys remember, why did crypto pump in 2021? It's because people were searching for yield. People were starved for yield. And crypto was a way to actually get yield, get returns on your money, which was projected to start inflating in a low interest rate environment. So as interest rates start to drop again, and this is more my thesis for next cycle, not this cycle, but I do believe they will start dropping. I know we've still got a couple hikes, so, this is a long-term thing. But as they do start dropping what will happen is when yield dries up, Ethereum now has the monetary policy to enable people to earn your 5% a year on ETH. Now, last bull run, they didn't have that. Next bull run, I expect the staking ratio to be a lot higher. So not only do you have an environment where liquidity is coming into crypto, but you have actual utility for ETH and also more demand for ETH. Because people need to stake it and lock it. So the staking dynamic for Ethereum has changed the game. I just don't think we have really seen the full effects because, it's a boring market. And it's going to take, as I said, a more dry yield environment globally for Ethereum to really see the benefits there. So my thesis in Bitcoin and ETH are very different. ETH is more of a tech investment. Bitcoin is more of, your digital gold type play, hedge against money printing, etc. And I like them both for different reasons. But what about altcoins? Bitcoin and Ethereum, all right, let's assume they aren't under the SEC's purview for now. Maybe Ethereum runs into some trouble at some point, but Bitcoin definitely not. What other altcoins could be safe from the SEC? The first one's actually Polkadot. Now, you'll see a trend here. The tokens that I'm going to mention are down typically less over the last couple of weeks. Now, Stacks did have a big correction, but the correction over the last week is less than a lot of other alts. So some of these coins are actually performing better. And these are the tokens that might not be viewed as securities by the SEC. So the first one's Polkadot. Why could Polkadot not be a security? Well, they've been working for 3 years, since 2019, I believe, with the SEC. So Polkadot actually released an article. They said, for 3 years, we've met regularly with FinHub staff. In doing so, we've adopted an approach to compliance that's similar to our approach to technical development, head down and dedicated while setting the bar high. In their conclusion paragraph, they said, in the meantime, we marked 3 years since the date of our initial outreach to FinHub, nearly 1 year since the completion of the Polkadot launch process, which was their parachain auctions, which includes a truly decentralized governance mechanism and on-chain treasury. Consistent with the views that we have shared with the SEC staff, we are pleased to announce that DOT, the native digital asset of Polkadot, has morphed. In our view, current day offers and sales of DOT are not securities, and transactions DOT is not a security. It's merely a software. So the fact they've been working with the SEC is a good thing. Could they be named as security still? Yes, but currently the market is viewing them potentially as a non-security. The other one is Stacks. This is obviously a Bitcoin layer 2, a narrative I'm actually pretty bullish on. This could be a decent performer in the context of the SEC actions, because if you actually go into the SEC website, you can see here 𝗖𝗵𝗲𝗄𝗃. They actually have a information page on how to buy stacks. The reason they have this is because the Blockstack IDO was one of the first official token launches / offerings in US history that was SEC qualified. So the SEC oversaw the launch of the Stacks tech offering. So for that reason, Stacks is in a decent position as well. What other tokens are in good positions as being, non-security, so the ones that aren't these tokens and aren't experiencing as much of a hit as those tokens? Well, proof of work token. So obviously Bitcoin, but also interestingly, Dogecoin, Litecoin. Now, Gensler famously said Litecoin wasn't a security. I would look through this a bit. I would actually ask myself, why Bitcoin, why Litecoin, not a security? Well, it's very simple. Proof of work governance structures are considered to be more decentralized, since you don't have that centralized point of risk, since you don't have that centralized controlling party controlling the issuance of the tokens, and because you have hash power spread out across thousands of miners, that helps the argument that it's not a security. So just the pure decentralization of these assets bodes well. The second thing is, the way you earn yield is not through staking, it's through mining. Mining rewards, block rewards, which is very different from a staking mechanism, which is like, you stake your token and you earn yield. The argument there in a lot of cases for like Coinbase and Kraken has been, if you're offering these staking products, you are essentially peddling the expectation to profit, which satisfies one of the criteria of the Howey test. So proof of work networks are in a good position. Now, I'm not bullish on every proof of work network, but personally, Bitcoin I like. And also, funnily enough, I actually don't hate Doge. Now, don't kill me for that. I don't love a Litecoin. Look, this is my opinion. You might love it, and you have to make decisions on this yourself. But, I actually don't mind Doge. I like Bitcoin. Monero, I don't hate Monero. I think there's benefits to Monero. I know a lot of you guys like Kadena that could, and obviously not all of these are going to be named on securities, because this is just a list of proof of work tokens. Some of these are going to satisfy different criteria if the SEC does, go after them. But basically what I'm trying to spell out for you here is there is a narrative of tokens that aren't SEC compliant that could be outperformers versus the tokens that, are going against the SEC here. And this may just be a short-term thing, but just consider this when you're building your portfolio. I'm not saying ape into every non-security token, but this is a very interesting narrative that's going to start developing. And what I would do is I would actually put all of these tokens, so the ones you're interested in, maybe that's DOT, Stacks, Bitcoin, ETH, Doge, or maybe like Monero, Litecoin, whatever, put it all into an index on TradingView and track it against the market, against the other altcoins. And we'll see, and I'll track this with you over the next few weeks, how the relative performance is. If this shows relative performance, well, we can start to come to some conclusions that it could be a decent play. So the SEC has not named a lot of the proof of work tokens as securities because there's no central issuer. I think that is the largest thing here. The fact there's no central issuer and the fact that there's not an expectation to derive profit through staking. So now what I want to do to wrap up the show is talk briefly about two narratives, which off the back of the the kind of SEC compliant narrative that I think could perform well in the DeFi sector on a relative basis. Then at the end, I'll answer any questions that you guys may have. Before we get into those two narratives, I want to introduce a new show partner, which is CoinWeb. They are a Web3 wallet, a nice wallet solution for especially the users that use iOS that are currently doing a $1,000 giveaway. So if you do want to potentially win $1,000, all you need to do is follow them on Twitter, join their Telegram, and click on their quest board to claim your XP. There's a link in the description to CoinWeb if you want to check them out. It's a secure and easy to use crypto wallet. Very good wallet and a pretty nice product for you guys. So yeah, if you are looking for a new wallet for iOS, I would recommend them. And of course, there's the giveaway in the description. Okay, so liquid staking and DEXs, they are the two biggest categories right now for TVL. They are also two of the biggest narratives I'm looking at the moment. I'm going to do a more dedicated video breaking down some of these tokens in the future, but kind of what I've been thinking about over the last few weeks is, okay, things are getting ugly. If we do see capitulation, like we have seen last week, what narratives can bounce back the strongest? And I think LSDFi, which is liquid staking derivatives finance, and DEXs, due to individual catalysts for both those narratives, can be relative outperformers in the market. Now, it doesn't mean they might pump against a dropping market. It just means a lot of these will hold up better. And when the market does return to bullishness, at whatever point that is, these can be two of the outperforming narratives. So I'm looking, remember earlier in the video, I said, I like to have a more condensed portfolio. Well, within that portfolio, I'm looking at these to constitute, a decent chunk of my altcoin bags for now, just because I think there is something happening in both of these narratives. If you look across Twitter, the only real thing that still has a bit of hype and still stands out is LSD finance. And the only thing that stands out from a metrics perspective is the DEX narrative right now, with the shift from centralized exchanges to decentralized exchanges. So I'm not going to do a full deep dive on LSDs right now. You guys know, about Lido and Rocket Pool and Frax. Those are the LSD providers. But then you have your DeFi plays, which are your projects that are facilitating anything LSD related. So that might be, your AMMs for liquidity pools. That might be, your staking solutions, etc. So you have kind of different LSD-backed stablecoins, diversified LSD platforms, DEXs, money markets, AMMs, interest rate swaps, etc. That can actually power your kind of DeFi experience with LSDs. I think it's a big narrative. Staking ratios are increasing extremely quick on the Ethereum side. It's been one of the strongest performing sectors. And the new narrative that's kind of being birthed from that is this LSD finance. Now, there's a good thread by Delphi that I would read that names all the projects involved, and I would check that out a bit further. As I said, I'll do a future breakdown of this in the future. I'm just kind of giving you a preview to the narrative. A lot of these tokens as well significantly increasing in TVL, as a lot of people are choosing to provide liquidity to those services. The leading project in the pack here is Libra Finance, which is basically a protocol that's issued a token called EUSD, which is an interest-bearing omni-chain backed stablecoin backed by LSD, 1-to-1 hard-pegged, 0 mint loan fee, and 8% base APY. So that is a new stablecoin that is attracting a lot of TVL. The second narrative I want to discuss quickly is the DEX to kind of the DEX migration, because what's actually happened is a lot of people now don't really want to use centralized exchanges, and for good reason, whether that be KYC, whether that be just the regulatory risk, maybe there's no on and off ramps, etc. A lot of people are now shifting to DEXs. They feel more comfortable on DEXs. And as a result, we've seen DEX volume explode, especially spot volume, not so much perps yet, but definitely, volume over the past 24 hours, $1 billion, 13 bill over the last 7 days. The majority of DEXs are on ETH, but of course, a lot of these have experienced a pretty significant uptick in volume. So this is something I would also track as a narrative. We can see here, I know June has dropped, but that's just because the month isn't complete yet. At the end of the month, we'll get our summarized average data, but we can see the ratio, at least in May, was 22%, which is up from September, like almost 200%, which was 7%. So it's almost tripled the amount that's being traded on DEXs versus centralized exchanges. Trading volumes on the top 3 DEXs, so that'll be Uniswap, PancakeSwap, and Curve Finance, over the past 48 hours, following the SEC's lawsuit against Binance and Coinbase, has increased by 444%. So huge gains on that side. So this is a big narrative to watch. I'm always on the lookout for perpetuals. I know perp trading is kind of slow right now, but if things do start picking up, I think the percentage change in DEX perp volume versus centralized perp volume will be higher. So that doesn't necessarily mean it'll be higher on like a 1-to-1 basis, like a DEX volume now versus January, because the market's less active than it was in January. But on a change basis, I think we will see a larger uptick in the perp DEXs. That does make, for me, a lot of the perp DEX plays compelling in this market as decent reversal plays. So when we are buying altcoins, factoring this into our thinking a little bit, at least into my thinking, as potential plays, because these are the ones that could be strong performers and have mechanisms which make them somewhat resistant to market conditions. Obviously not, because they've still dropped, but with things like GLP, with the GNS DAI staking pool, there are yield-bearing opportunities that aren't necessarily conducive of needing to hold an underlying token. You're holding a stablecoin or a basket of assets. So if you do want to trade on a DEX, I would recommend 𝗕𝗏trade. They are a show partner and they have a bunch of pairs. So they've got, a lot of altcoins, but also they've got commodities and Forex as well. The interesting thing is, for anyone that wants to try their luck, they've got a $100,000 trading contest right now. So for the top 30 Arbitrum and the top 30 Polygon traders, you can win prizes in Arbitrum and 𝗙, which is a stable coin, up until June 30th, which is when the competition ends. The top 30 on each will win a prize. So $100,000 worth of prizes. I think it's their biggest giveaway ever, which is huge. And if you want to try your luck trading, or even if you're just looking for a new home, then and you want to do it on a DEX, there's a link to 𝗕𝗏trade in the description to sign up and join the trading competition here. Also, if you're really bad at trading, if you suck at trading, the loser, the least profitable trader, will also receive a much needed consolation prize. So they're actually going to give a prize to the loser, but obviously don't purposely try and lose, because if you don't come last, then you're just going to be down. So don't purposely try and lose, but there is a slight consolation there for the ones that really screw things up. You might actually win a prize for coming last, but that's quite funny. But yeah, top 30 will have access to that 100,000. So yeah, just wanted to mention that trading comp. All right, quick market update, question time, 5 minutes. Basically, I don't know if you guys have been watching my AI shows, but I've been doing a couple AI-based shows a week, which is basically what other ways that we can use AI to help us become better crypto investors. So I've got a video on the weekend, which is a tutorial on how to use ChatGPT to actually analyze white papers and find crypto gems. Because basically the innovations we're seeing from the new ChatGPT versions, the new versions of 𝗏𝗏, are creating opportunities to actually help us become much more efficient investors. I think it's a huge narrative, and I think it's also a huge tool for investors to take advantage of. So I'm going to be doing videos on that on the weekend. So if you are keeping an eye out for new content, watch for those videos. They're short edits of less than 10 minutes. I already did one on render. I did one on my top AI pick and shovel plays, but I've got more of these videos coming. So I'm only live streaming twice a week now, but I'm also going to be doing that kind of content to help you guys actually incorporate AI to become better investors as well. So hopefully you keep an eye out for that. Someone said very based. Someone said Danhausen rocks. Is XRP safe? Well, the XRP case right now is basically the one that is going to set some sort of a precedent. Now, I know it's not binding, so the courts that do Binance and Coinbase don't have to listen to XRP, but the XRP result will set some sort of precedent for what is viewed as a security, what constitutes the Howey test and what doesn't. The Hinman documents that were released, the emails that claimed, ETH and Bitcoin weren't securities, went a little bit of the way towards helping XRP, and for that reason, they could actually have a favorable case result. I actually think that's the probable outcome, and that could definitely help other altcoins. Does that mean XRP is safe? Well, obviously not until the ruling, but I think the indication right now is yes, it probably will win. At least, in my opinion and the opinions of other people. Fabian here mentioned time-based capitulation. We spoke on that before. I just think that's really important. He said, don't make the mistake of thinking that prior lows will save your alts just because back then was peak FUD. Surely it can't go lower. You have to remember time-based capitulation. That's true. A lot of investors, they are going to sell because of time and not because of price anymore. So 50% drawdowns in a day doesn't scare people. They're like, oh, I'm going to buy the dip. What scares people more is months of bleeding. That really fucks with people more than just a month. So as I said earlier in the show, to maintain conviction during a time-based capitulation, you need to have conviction in the alts you are buying. And if you don't, I highly recommend either developing conviction, or if you can't develop it, because it has to be natural, just condense things down to the tokens you do believe in. It's very simple. Runner pointed out that the liquidations weren't too huge. I'm actually going to look at CoinGlass liquidations now. But yeah, the liquidations weren't that big despite a pretty big drop. So we had 148 mil, decent size. I think the reason for this is because a lot of people just don't have open positions right now. There's not a whole lot of trading going on at the moment, which could potentially be the reason for less liquidations. But 150 mil, still a decent amount. Obviously, a lot of which is going to happen on the altcoins, BTC, had, let's just look over the last 24 hours. ETH, BTC, the two biggest, because they were lagging. A lot of people maybe went long at support for ETH and then they dropped. But you have, XRP. A lot of people were long XRP. Hinman docs ended up being a buy the rumor, sell the news event. Who would have thought, by the way, the day the docs get released, XRP drops. Oh my God. It's like, we're not seeing history repeat for the 50th time. BNB, of course, a lot of BNB FUD. Litecoin also dropping as well. 𝗬𝗏, and some of the other culprits here were some of the other big liquidations. Just looking through a couple other questions. Blockchain is the future. I mean, I agree. The possibilities with blockchain are huge. And there's a reason why, you've got the UAE, you've got Hong Kong, you've got Singapore, you've now got the UK wanting to be a genuine home of crypto because they see the potential and they know that there is innovation here. And they know, I mean, the governments know this too. Why would they be making CBDCs if blockchain tech sucked? It's obviously pretty good if you're going to pilot an entire new digital currency on the blockchain. It's great. Digital currencies clearly are the future. Whether the governments use that to their ill advantage or not, we need to see. But we know blockchain's the future. I mean, it's clear. So yeah, just looking through a couple other questions here to wrap things up. Someone said Joe's volume has been good. It has dropped, but I think that's one of the tokens that's in my kind of list of things I'm interested in. Soul Killers, please, Miles, pump my bags. I actually did buy some Sol during the crash, and I'll continue to average in a little bit as kind of like, look, I know it's not a strong token, but as a long-term play, adding a little bit to my Sol bags. Someone said the Graph's a scam coin. Well, the Graph just has bad tokenomics, but long-term, it's one of the only protocols that's solving the indexing issue in crypto. So I don't mind. I don't mind the Graph long-term, but yeah, it's hard to hold. Someone said trade it, don't date it. I think this is important for a lot of coins. So I'm pretty selective with what I hold long-term. As I said, very small portfolio. Everything else can still be traded, right? If you're seeing a DEX narrative that's really strong, all right, you think DEX is going to pump, there's catalyst behind it, you don't need to buy and hold those tokens forever. You can trade them. Okay, let's say you have a 6-month time horizon on a certain trend. You can just buy a coin for 6 months, trade that coin, and then take profits back into Bitcoin and ETH. You don't need to hold every altcoin and DCA into it forever and have these heavy bags all the time. Like, you don't need to do that. That is one approach. But if you are taking that approach, you need to make sure the tokens you're holding, you have conviction in, but also you have to make sure they're the best tokens in their niches and they're going to be around next cycle, because most altcoins won't be around next cycle. Every cycle prefers the new shit. The old shit often goes out the window. People just love the newest, shiniest thing. So just keep that in mind. Always have stable coins on the side for buying the newest, shiniest thing, and don't get too caught up with dating tokens. A lot of the time it's better to just trade tokens. But yeah, you can hold things you have conviction in, of course. That is one strategy. A lot of people will actually trade themselves into a hole. So you can make the argument for the majority of people that DCAing is still the best approach, due to the fact that most people will just wreck themselves trying to trade the market because they're never going to time the tops and the bottoms. And I don't claim to be able to either. I think it's very hard, if not impossible, to do that. What I look for personally is genuine bottoming formations, big capitulation events, and general top formations. For example, we saw a pretty clear local top starting to set in. It wasn't clear on the 14th of April, but it was starting to become very clear on the 26th of April. So, okay, sure, you do miss that initial 4 or 5% move, but once you start breaking down across this key horizontal at the 29K level, that is your sign on your underside retest here to go short. And on Bitcoin, that short would have been a 14% trade, but we know on alts, a lot of them are down 30, 40, 50% since then, if not more. So you would have shorted alts during that period. And that's something I actually did. And you go back and watch the shows. We were pretty spot on when it comes to that trade as well. Just looking through here again, Omnichain DeFi is the future, 100%. We were saying this last cycle. The problem was last cycle, there was no infrastructure to underpin that thesis. So this cycle, we have layer 0. This cycle, we have more omni-chain infrastructure. Like Stargate was a great example of something like that. Also, omni-chain swaps, we're now starting to become a thing through apps like Chainflip and SushiSwap. So we're starting to see omni-chain DeFi become a thing. A lot of LSDeFi protocols are implementing it, like Libra Finance, like we discussed before. That's definitely a narrative for next cycle. I'm actually trying to farm the layer 0 airdrop. So guys, bit of alpha here. I don't think it's too late for layer 0. Start using that chain. If you do want a full thread, you can Google on Twitter, layer 0 Miles Deutscher. I have a full tutorial. Or if you want some more up-to-date information, search on Google, layer 0 airdrop CoinGecko. CoinGecko released an article. I'll show you now. 0 CoinGecko, which basically outlines a lot of the steps. Layer 0 potential 𝗏 token airdrop guide. This is something I'm doing. I think it could be one of the biggest airdrops of the year. Just saying that because a lot of you, might just be better off trying to pick the free money up instead of trading yourselves out of a hole. Airdrops actually give you the chance to earn money for not a lot of time or money spent. Want to remind you quickly that there's a $30,000 huge OKX sign-up bonus. I know some of you can't sign up depending on what country you're in, but if you are in a country where you can, just for creating an account, you can get up to $10,000 worth of a mystery box. So obviously might not be 10K. It could be anywhere between $0 and 10,000, but there's a mystery box there. As well as the people that deposit more than $50, you can receive a second mystery box worth $10,000. And for the ones that want to go a step further, there's an additional $10,000 worth of rewards for trading incentives that you can use to stack up to a 30K total bonus. So look, you may get 0 from your mystery box. You may get a shit ton, who knows? But yeah, you basically, all you need to do is register for an OKX account for that $10,000 mystery box. And then you've got these other steps for the ones that want to go a little bit further and deposit to get a second box as well. So there's a link in the description that you need to use to get the bonus. So the $30,000 bonus is only eligible for Banter signups using the link in the description or, another Banter host link, but you need to use one of our links if you want to get the sign up bonus. I think for now, that is good. I'm just going to look through and see if there's any more questions. But if not, I will see you on the weekend for that AI tutorial that I'm going to show you. What's the best DEX to use? Depends what the purpose is. I use 𝗘𝗵𝗄𝗏 for DEXs. Like if you're wanting to do spot trades, just because that'll aggregate through like Uniswap, etc. to get the best rates. If I'm doing trades on a perp DEX, Gains is probably my favorite. I just think it has the most pairs and the best execution. But I also like Apex. Apex is good if you want an order book exchange. So those are probably my two favorites. GMX is good as well. But yeah, I'd say Gains, 𝗘𝗵𝗄𝗏, that kind of stuff. All right, cool. I think that's it for now. So I'm going to see you. I'm running my own show because we don't have a producer today. So I'm trying to figure out how to actually end the show. I'm a noob. I think I just figured it out. I'm going to see you guys on the weekend for an AI tutorial. Hope you enjoyed the show today, got some value from it. If you did, smash the like button. I'll see you guys on Twitter. I'll be tweeting all day. I'll see you later. Peace out.